your Swing Alpha Trade Report for February 10th, 2018. The market correction continues, although we do possibly have a market bottom on Friday when we had a bounce off the 200 moving day average. We previously had two other bounces back during Brexit and the Trump election. And we also have a large hammer candle pattern, so this marks a probable bottom. We've had a fall from the top about 11.4%, which is typical of corrections. Corrections can be anywhere between 9% and 20%. So 11.4% is generally reasonable. We do not, however, expect it to suddenly just bounce back up from here. We expect to have some form of consolidation period. It could possibly last 1 to maybe even 2 months. Hopefully, sooner the better, so we could start adding on some long positions really fast and make money again. Our portfolio, we actually had the worst month in the history, the worst 1.5 weeks in the history of our portfolio. From the top, we are down 6.8%. The market, however, is down 11.4% from the top, so we outperformed in that sense. On the month, we are down 6%. So far for February, this is our worst month, although we still have 2/3 of the month left. So we're down 6% on the month. The market is down about 7.8% for the month. We're also still up about 1% on the year, starting from the end of last year, while the market SPY is down about 2% on the year. So we're outperforming the market by a small amount, about 3%. Now, going back to the markets here, we've taken a bunch of trades recently. We're currently now in 75% cash. During a correction, the large institutions see large numbers of stocks that are great value, and they want to buy these stocks. To free up some cash, they'll sell off the not-so-quality stocks. So you'll see low-quality stocks continue to fall, whereas high-quality stocks, they will go horizontal and eventually go back up. And so we're going to do the same thing. We're going to go short any low-quality stocks, and we're going to go long any of the high-quality stocks. Right now, we have a 75% cash position, so we're quite ready to buy the bottom and load up when the market is ready. We have 4 positions right now. We have 2 shorts and 2 longs. I'll go over that in a little bit. All right. So first, let's go over our recent trades. Start with LNTH. LNTH was a losing trade. We had gone long on December 26th, which would be this green candle right here. We had gone long, and it was working out, and then the market correction killed the stock, killed the trade entirely, and we eventually bailed out on Friday, although it looks like we had bailed out near the bottom, which is unfortunate. But if it does start doing really well, we could just get right back in. We took an 8.4% loss on LNTH. The next trade is CZR. CZR, we had gone long way back on September 13th, which would be, let's see, this, right here, this right candle right here, we had gone long. And it started working out really, really well. But then we got this strange consolidation pattern right here. The uptrend wasn't uptrending anymore. And also we had this huge, scary volume pattern. I'm not quite sure what's going on right here. But when we saw this sell-off, we decided, okay, it's time to get rid of this stock. It looks questionable. It looks like it might actually have topped out and might continue down from here. So we bailed out, although possibly we bailed out on not the best of timing. We'll just have to wait and see. But we took a 5.4% profit on CZR. So up 5.4 on this, although we didn't make nearly as much as we could have if we sold at the top. Now, the next trade is NVCR. NVCR was another winning trade, although our timing on our exit wasn't as good as it could be. It had been going up for quite some time. And so we had gone long on this pullback right here. We had gone long on October 20th, which would be this candle right here. We had gone long. Where is it? Yeah, right here, 20th. And it looked like it was working out as well. But then we got this consolidation continuing, and it looks like it had a fake breakout. So we panicked. We were like, okay, this is not looking good. We also have a bear flag. I don't know if you can see the bear flag in here. I'll draw it for you. There's also this potential bear flag, which looks a little scary. So we decided, okay, it's better to just cut our losses and free up some cash. And so we sold this as well. We have a 9.6% profit on NVCR. Our next trade is actually a losing trade again. JNUG. JNUG was meant as a hedge for the market in case the market crashed. JNUG should, in theory, go up. Well, clearly our theory was quite wrong. We had gone long on December 18th, which would be right here on this green candle, and it was immediately working out. It was working out quite well. However, it never did hit our target. Our target was within this region right here. And as soon as the market crashed, so did JNUG, which was really surprising. We eventually bailed out today. It's a bit unfortunate because today almost looks like a bottoming candle. But if JNUG starts to bottom out and starts to go back up, we will go long JNUG again. So JNUG, we had a position size of only 3% of our portfolio. So it's a very small position size. However, we did have a large loss, which was 18.6%. So 18.6% of 3% of our portfolio, it's a relatively very tiny loss in total. It's very unfortunate hedge. Now let's go over our more recent trades, SYRS. So SYRS is a short that we took on Thursday. So SYRS had been falling for quite some time. So we think that when the market eventually finishes its correction, SYRS is just not going to recover. It's going to continue its selling off. So we had gone long on Thursday, which is this red candle right here, an expectation that it will continue down. And as you can see, it's been trending down for quite some time already. The other trade is Momo. So Momo is in a bear flag. You can see this bear flag right here. It actually broke out yesterday, Thursday, but we hesitated with our entry. And then today we saw some follow through. So intraday, we decided to short it. However, it did seem to recover towards the end of day, so this trade might not actually work out. So Momo is a bear flag, and we're expecting it to continue selling off within the near term, maybe next 1-2 months as well. Now we have 4 positions. There's Momo, there's SYRS. We're still holding SAM, and we're still holding Flow as well. These are 2 long trades that we had taken a while back, about a month ago, and they're still holding up. They're still doing well. So we do believe that when the correction's over, these 2 trades will continue working in our favor. So that concludes our trade report. Definitely do not panic. We're definitely near the bottom. However, you don't need to rush in right now. We do expect the market to take about a month to consolidate, and we will slowly enter in longs. If you're not signed up with our service yet, definitely check out our webpage, swingalpha.com. Definitely sign up for our alerts. That concludes our trade report. Hear from you on Monday.